Hi guys, welcome to my channel. Forex with Law. It's nice to have you guys here. In my last video, I talked about Wyckoff schematics, and I said there are two types of Wyckoff schematics. We have the distribution schematics and we have the accumulation schematics. In the last video, I discussed the distribution schematics, and if you are here to watch that video, please do well to go watch that video first before watching this accumulation schematics video, because I did an in-depth explanation on Wyckoff in that video. Okay, so the distribution schematics is used to look for sales in the market, while this accumulation schematics I'll be talking about today is used to look for buy trades in the market. So just like in the distribution schematics video, I said we need 3 drives up, but for accumulation schematics we need 3 drives down. That is, we need this we need to see this low, see this second low, and this third low, taking each other out. Okay, so in this schematics we also have some terms we use to in Wyckoff for these schematics. Okay, so for the start of the accumulation schematics, okay, for the start of the accumulation schematics, we have what we call the selling climbers, which is labeled as SC. We have the selling climbers, that is, this represents the first phase of the schematics. Okay, and these accumulation schematics, you will find them as demand zones. Okay, we want to find this whole schematics at demand zones at the bottom of the chart. Okay, so the first phase, we have the selling climbers that gives us the automatic rally, that is a sudden push up after reaching these climbers in the market. The selling climbers gives the automatic rally. Then the automatic rally goes to retest these selling climbers, the secondary test. Okay, giving us the automatic rally gives us the secondary test, and this secondary test comes back to test these selling climbers. Okay, so this ST later moves up and gives what we call the sign of strength, just like we have the sign of weakness in distribution schematics. So we have the sign of strength in this accumulation schematics. I also like to call this sign of strength obtuse, UT. Okay, so the sign of strength takes out the automatic rally, then the sign of strength goes down to take out the selling climbers and the ST, giving us what we call the secondary test too. That is, it comes back down to clear out the secondary test and the selling climbers. When we have the secondary test 2, the secondary test 2 goes back into the accumulation and mitigates about 50% of the selling climbers and the automatic rally. That is the range between these selling climbers and the selling climbers and the automatic rally. It comes back and mitigates about the 50% of this range. Okay, so then we proceed to what we have, what we call the spring. Okay, these springs represent the last phase of the accumulation of this whole accumulation. The spring represents the last phase, and to have what we call a confirmed spring, the spring needs to then go ahead and take out the whole accumulation. That is, this whole range, the spring goes up to break above it. Okay, so once the spring breaks above the whole accumulation, breaking above this sign of strength, then we know we have a confirmed spring. Then we know this spring is really signifying the end of the accumulation phase. Okay, so what you want to train your eyes to see in the market in demand zones is these 3 drives down. Okay, the spring, the ST2, and the secondary test. Once you have this, then the spring takes out this, then you know you have a complete accumulation. Okay, all you then need to wait for is for this spring that has broken above this accumulation to come back. You want price to come back down into this region. Okay, this region is what we call our trading range. Okay, this region between the selling climbers and the automatic rally is what we call our trading range. Okay, that is in this range we want to look for our buy in the market. Okay, so and in this leg in this leg of movement, this impulsive move to the upside, there will be a demand zone. There will be a demand zone around this area. There will be a demand zone, order block or imbalances that you can trade off from, to give you entry for buys in the market. Okay, so this is just what Wyckoff Accumulation Schematic does for us. It helps us to take like confirmations. It gives us confirmations for entry, give us confirmations to go long in the market. Okay, so and like I said in the distribution schematic video, that sometimes we may not always have the perfect Wyckoff. Then this test is this region right here is what we call the test. That is, when once price comes down here, this is called test, coming to retest the zone around this spring. Okay, so this is labeled as test, where while in distribution schematics we call it the last point of supply, but this one we call it test, or we can also call this preliminary, no, not preliminary support. We can also call this PS. Yeah, preliminary support. You can also call this preliminary support. So this is how to use accumulation schematic to look for buy trades. Also, we may not have the perfect Wyckoff, the perfect accumulation schematics. Okay, there are sometimes that we may have the SC, we may have the AR, we may have the ST, and this ST not breaking above the AR. In some cases, this SC may not break above, or it may just be tiny wick above. Okay, and in some cases our ST2 may mitigate more than 50% of this zone. Okay, so when this happens, you don't need to panic or be like, oh, this is not Wyckoff. It is still accumulation schematics. Okay, all you need to do is wait for your spring, okay, to take out the whole accumulation. Okay, so now let's go into the chart and look for the accumulation schematics in the chart. Okay, so we'll be using Nzdchf as an example of the Wyckoff. On the daily time, starting from the daily time frame, we can see on the daily time frame that uh, uh, Nzdchf broke above this previous high right here. We had a break of structure here. We had a price move impulsively to the upside. Okay, so then market came back to tap into this demand zone on the daily time frame. This demand zone was tapped, but as you can see, as this demand zone is being tapped, we cannot enter off a daily demand zone. That is too huge to enter from. So we need something like the Wyckoff accumulation schematics to then take entry in order to long in the market, because now we can see that moving closer, we can see that we have a break of structure right here on the on this pair, and this break of structure, we had a push to, from this we had a push down into this demand zone. Okay, and as you can see, price left a big leg of imbalance here, and as you can see, we have imbalance left behind right here on every price action. So in the future, we know price will definitely react off this zone to come back to fill this up. Okay, so now, but we can't just enter off this daily demand zone. We need confirmations. Okay, so in this case now, we can drop down to the 1 hour time frame, and on the 1 hour time frame, we can see, okay, let me take this is the daily demand zone. Okay, price has tapped into it. We are looking for entries to go long in the market. So now all we need to do is so let's cut. Okay, so on the daily time frame on Nzdchf, I saw that we had 3 drives down. We have this, we have this, and we have this. So citing this at first in a demand zone, this demand zone from the daily time frame, I cited this on the daily frame, daily time frame. So all I needed to do was label it and check the order and check the accumulation phase. Okay, so now let's label it. For this phase, we have the selling climbers, we have the selling climbers, we have the AR, okay, we have the secondary test, we have the sign of strength, or what I like to call it UT, and we have the ST2, and this is our spring. Okay, so all I needed to do was wait for, sorry about that. So all I need to do is just to wait for the break of our SOS, or what I like to call UT. So I waited for this break to happen, and from that example that I gave from my little diagram, let's go back into it. Okay, can't find it now. So all I needed to, for me to know this spring is a confirmed spring, it needs to break above this, and now we've broken above the UT. So all I need to do is find my trading range. My trading range is between the selling climbers and the AR. Okay, this is my AR. So in this zone, I know for sure we are going to have a test of this zone. Okay, but now as you can see, taking a look at this zone now, there's nothing clear on this zone. If you go on the 45 minutes time frame, I can't find a clear order block or a clean demand zone or imbalance. So but I know for sure this zone needs to be mitigated for us to go back up again. So I think I went on the daily time frame, on the 4-hour time frame again, and on the 4 hours time frame, all I needed to do was look for the last down candle, and as you can see at this zone, we have from the spring, we have this zone being mitigated. Okay, and we have this zone being mitigated, and next is this zone, but not so clear. I think we should go on to the another broker. Let's look at Rwanda. I think I was on Rwanda. Yeah, yes, I think Rwanda is much better. So let's quickly relabel our charts. We have the selling climbers, the automatic rally, the uptrust, the sign of strength, our secondary test 2, and our spring. Okay, so we have our spring right here, our ST2, our sign of strength, and our ST, of course. And we say our trading range is between the SC and the AR. Okay, and let's cut price. So all we needed to do is wait for price. We've broken above the SC, we had a break of structure above this SOS, that is the sign of strength of the trust. So we are waiting for a retest of this zone. Also, you can use your Fibonacci retracement. Now I can't find a clean order block like an unmitigated zone or imbalance. So I use my Fibonacci retracement to allow price to wait for price to come down first. Okay, so now we can see retracement, right? You can see retracement. Let me make my chart clean. So use my Fib and look for discounted zone. So our discounted zone is zones around 61 and 78. on the Fibonacci retracement too. So at these zones, I was expecting price to come back to these zones, okay, to this area, okay, and because this area is big, I just have to wait for price to come back into this area, tap into it, and go on the lower time frame and look for confirmation. Okay, so let's play. So in some cases, we have some cases whereby we will find a clean demand zone around this area. It will just be there, clean one and other block or imbalance, something to enter off from. But on this Nzdchf chart, there was nothing clean, so we need to just wait. So market came and mitigated this zone. You can see now market went to mitigate this last candle right here. It's mitigated it, and you know this is our trading range, our SC. So we know price should at least get to this area, right? So price mitigated this and gave an impulsive move out of this zone. Okay, so all we need to do is just go on lower time frame and look for confirmation entry. Okay, so we can now mark out our structure. We can map it out and wait for a break of structure. We can see we have this high, lower, another lower high, then another lower high. So we can wait for price to take out this lower high to confirm to us that we are going bullish. That is, we want this to take this out and retrace back down so we can find a buy entry. So let's play. We are waiting. We need a break above this high. We need a break above this high. Can we get that? In the break. Let's go to the 30 minutes time frame to be faster. Yeah, so now we finally got that break. Above this structure. So now I'm looking for my entry, and in this leg of impulsive move, I can see we have this other block with imbalance right here. This is other block with imbalance right here. So let me move this to the left. So we can see we have this other block here with imbalance as well. So all I did was put my buy limit at this level. So but looking to the left, with this was with just 9 pips stop loss. I think I refined down more. I think I had about 8 pips stop loss or so, 9 pips stop loss. But looking down, we can see we have this imbalance just below our stop loss, and trust me, I don't want to have a stop loss that is lying below, that is lying above imbalance. Okay, so but if I was to extend my stop loss to this region, I'll be having up to 19 pips stop loss, and I don't want that. I usually will do a maximum of 15 pips stop loss. That's my maximum stop loss to use. So looking at this one, I saw that we had imbalance and like some sort of unmitigated demand right here. So what do? I then went down to the 1 hour time frame. On the 1 hour time frame, I noticed that we had yet a bigger demand zone that has been mitigated two times with these wicks. This zone has been mitigated one time and for the second time as well. So seeing this, I then decided, okay, fine, looks like this has been mitigated on the 1 hour time frame, but on the 30 minutes, 15 minutes time frame, we had imbalance line there. So what I did was, in order to be secured, I decided to put my stop loss just at the body close of this demand zone, just in case market will tap deeper below my stop loss that I originally had. So now I had my stop loss at this body close right here, and my stop loss at this body close, leaving me with a stop loss of like 13 pips. I think I had 14 pips. I think my entry was a little bit above. I think I had 14 pips as my stop loss. So let's go back to the 30 minutes time frame now. So I left it that way, and I think we should stay on the 1 hour. So, and for my take profit now, I don't always like to stay in trades for too long. Trust me, you want to be in the market and out of the market. You want to take your profits because markets can reverse at any time. So I had my take profit to be at this zone, this imbalance. I could see this imbalance there, right there. So I had my take profit at this zone. Okay, so let's play. So the market came, tapped into my buy limit, and I was in a trade, and the market went all the way up. And that was about a 1 to 5 RR trade. Yeah, with just 14 pips, and take profit was smashed. Yeah, my take profit was smashed, and once the market tapped this zone, yeah, my take profit was smashed for about 64 pips. The market started reversing. So that's why you need to take profit. I took profit at the first tap here, and I was out of the trade, though the market came back and to mitigate this zone again. So this is how to use Wyckoff Accumulation Schematics to look for buy trades in the market. So but for long term, I was projecting this market to go all the way up, but then I wanted to be out of this trade at this zone because markets could react off this supply zone and come back down to clear off this liquidity and tap back into this zone. So I was out of the trade here. So, and also I took a buy trade as well on Nzdchf, but not using Wyckoff. But I think it was on the same day I took this Nzdchf trade. Let's go to it. Nzdchf, Nzdchf. Yeah, so the yes, so this was also a buy on Nzdchf, but it wasn't Wyckoff. It was just a clear movement of we had high, we had retracements, then we broke above this previous lower high. So once we broke above this previous lower high, I think on the lower time frame I saw that we had this build up of liquidity. We had this liquidity here, right here. So definitely people who were buying this pair, as they were buying, most of their stop loss will be below at this area. And as we know, markets will tend to go to areas where we have liquidity in the market. So this was a liquidity zone, and we had this 1 hour demand right here. I think it's more clear on the 4 hour. Yes, we had this 4 hour demand zone with little imbalance in it. So when market was coming back, I entered off this 4 hour demand zone. Market tapped perfectly into it. I also took a loss as well on this trade. I took a loss because I had two positions. I opened two positions, and once I saw market tapped into this, moved up, we broke structure twice. We broke this first lower high. We also broke this higher high. Then market came back down. So I was expecting the market to mitigate this zone, which was more clear on the 30 minutes time frame. Yeah, so I was expecting the market to mitigate this zone and push back up. I think the 1 hour is more clear. Let me check. Yeah, so on the 1 hour time frame, I saw this little demand zone with imbalance. So I took another entry at this zone. but market went below my stop loss with just few pips. I think about 2 pips, and I had a loss on this trade. But my first position I opened right here was in profit. So it was in profit, and I scaled out. My take profit was on this at this imbalance. I noticed we had this imbalance right here. We had this imbalance at this zone. Okay, so my take profit was at that zone. Well, I was out of the trade. I think I took all my position out at this zone right there, which was about 100 pips. And trust me, I am okay with 100 pips. So, but my main take profit zone was eventually smashed right there. So I was already out of the trade at this level. So this is how to take trades in the markets using breakout structure and Wyckoff. Also, presently I am in Eurgbp trade. It is also a trade I took off or based on Wyckoff Accumulation Schematics. Let's quickly label that. We have I will not do all the lettering. We have the first drive, we have the second drive, and we have the third drive, signifying that we have the Wyckoff Accumulation Schematics. The spring was confirmed when we broke above this high right here. So all I needed to do was wait for this to come back. I've had this zone marked out since the beginning of February when we had this. I think the second week or the first week of February, I had this sent to my Telegram channel. So this zone was a nice demand zone from the daily and 4 hours time frame. We have this whole zone, but on the 15 minutes time frame, if you go on the 15 minutes time frame, you get a better refined zone on the M15. Yes, we had on the M15, this zone was perfect on the M15. You can see from the last low we had this LD price action, that is no imbalance was left behind. All prices were filled in this whole zone. Prices were filled, and then we created this demand zone that pushed up. The institutions came in at this level, pushing price above. Okay, so I had this M15 marked out as a refined order block or demand zone. So as we can see, price came into this M15 zone. Price came, I'm having a 15.2 pips stop loss. Price came to this zone, mitigated this zone perfectly, and price shot up. I think price had this impulsive move to the upside because of fundamentals. Right now we know about the Russia and the Ukraine stuff. This morning there was a news on the Russians sending their troops to Ukraine borders. So we had this push to the upside. So this was affected by fundamentals. So you want to be careful with Euro pairs right now because of all this news and happenings around Euro. So this is how to use Wyckoff Accumulation Schematics. This whole phase, if you mark it out, this is your this is accumulation schematics, your SC, your automatic rally, the ST2, the sign of strength or the uptrust, then the spring taking out the sign of strength or the or what I like to call the UT, and now coming back to retest the spring. So this is how to use accumulation schematics to find trades, profitable trades in the forex market. So guys, I hope this video was of value to you. I hope you learned one or two from this video. Please, if you are yet to subscribe to my channel, please do well to click the subscribe button, and please like my videos. Thank you very much, and I will see you guys in my next video.